Hey everyone, welcome back. Today is March 21, and this marks the end of the first week of the $1 Million Portfolio Challenge. Just wanted to say, wow, thank you. I really didn't know just exactly how many of you guys would actually want to watch a random guy talk about this whole savings thing. So, thank you. Glad to see you guys here and have you guys along for the journey. This ends the first week. And my account is currently sitting with a balance of $1,604.84. So right now I'm aggressively putting aside as much cash as I can into the portfolio each week. And this week I started building the foundation of the portfolio. I picked up 3 stocks: Novo Nordisk, ticker NVO, Barrick Gold, ticker GOLD, and a new buy this week, Google, ticker GOOGL. I'm also sitting on a little bit of extra cash right now through some new contributions today, and we will see if we get to use it next week. So performance this week has been negative, down about 3%. Novo Nordisk is the weakest link this week, and I'd like to buy more at an even lower price if this thing continues to drop. And it would be amazing if I had the chance to buy more in the low $60 range, which means dividend yield starts hitting that mid to high 3% range for this stock. Looking at the portfolio as a whole, I'm getting about a 2.2% dividend yield on the amount I invested so far, and it's decent, but I think it could be bumped slightly higher. I have a couple of names I'm looking at right now, which could boost that annual dividend yield up a bit. So let's see if I get to take that opportunity next week to branch out to some of these names. So in regard to news items for this week, the biggest headline would probably be the rate decision that we had on Wednesday. There was no change in interest rate policy, no surprise to anyone. A lot of my friends in the real estate business is starting to wonder if we're going to hit a recession later this year. And here in the Midwest, real estate is starting to feel like one of those pre-2020 years. So feeling pretty normal and maybe a little bit of cautiousness in general. Going into this challenge, I myself is a bit cautious as to where we are heading in the economy. But I think it's important to construct the portfolio in a way where I am buying quality companies that can maintain their profitability and also their dividend through ups and downs and any sort of volatility. That maybe we can build something that can be a bit more evergreen and survive these kind of moments in time. With those dividends that these guys are paying out, it should help me even out my cash position. So if we do find an interesting and attractive opportunity during times of volatility, we have some cash ammo available for us to deploy at those given times. So looking at next week, I am curious to see if the market is going to continue to bounce from here or if we're looking at another leg lower. Again, I'm welcoming volatility right now, especially if it means that we get to buy at a lower price. We are seeing sentiment on Main Street starting to change about the general tone of the economy, with the market sentiment index sitting at some pretty miserable levels, despite us having a pretty decent week, considering how sharp a drop we had last week. We're also seeing some commentary coming out from people like John Williams of the New York Fed and Mohammed El-Erian writing on Bloomberg, echoing that same sense of cautiousness. And that might be mostly because of just how much certainty that we have over policy right now. Being in constructions, that being a leading economic indicator, it seems like things are still fairly stable out here in the Midwest. We got a pretty surprising upbeat number on Thursday of existing home sales, beating all market estimates mainly due to the drop in interest rates in the last couple of weeks. Let's see if that's going to continue and if housing stays strong, because if real estate starts to roll over, I would definitely start getting even more defensive overall on the markets. If any of you guys are out on the coast or even overseas, I would love to get a vibe check on sentiment from you guys. So, how are you guys feeling about the economy or your own financial situation right now? What is your outlook? Drop me a comment below and let me know what things are like where you are at right now. And starting my first week on a down performance is definitely a bummer, but I made it very clear I'm going to be as honest and transparent in the whole process as possible to share the experience with you guys. On the flip side, I'm quite excited to have the opportunity to buy more of what I own right now at a lower price. So I hope I can offer some interesting insights for you guys and just share how my experience is going to go and basically my own feelings and how things will evolve over the next coming weeks. It's definitely not always flowers and sunshine in investing in the market, so this road is going to take a bit of time. But I truly appreciate you guys for tuning in, which is definitely helping me feel a little more comfortable and stay motivated with this whole game plan and potentially just see what's going to happen. All right, that wraps up this week's update for the $1 Million Portfolio Challenge. A big thanks to everyone for tuning in. And if you're interested in following my progress, please give me a like and hit that subscribe button below if you want to follow along with this entire journey. I've also included a link to my spreadsheet so you can see the various transactions that I had if you want to follow along. I greatly appreciate you guys for being here with me, and also I'm a bit of a rookie to this whole recording thing, so I'm still trying to find my voice and kind of figure my way around and get into the groove of things. So thank you for bearing with me. Please let me know how I'm doing or if you have any feedback below. I hope you guys have a good weekend. I will check back in with you guys next week on the next weekly roundup. So hopefully I'll see you guys on the next one, and take care, guys.